Hi everyone, this is Anne Marie. I wanted to go over the potash trade today, and I'll start here on the 15-minute timeline. We're going to use three things that we want to take a look at, and we're going to split apart how many things I actually did wrong going short in this trade. Granted, I'm only down 70 cents. It's not like I'm down $10. However, because I am such a technician and so used to having very small losses, this particular 70-cent position is just doing nothing but making me want to shave my head. So my goal is twofold here. One, I want to show you the things that I failed to notice, and two, I want to show you the things that I did notice but should not have put so much credence on. And then I want to show you what it is that I should have done. And I'm going to try and get that done in 10 minutes because that's the absolute longest that this can go unless I've got my own site that I can embed it in. And I haven't done that yet. All right, so here we go. First thing we see is if we've got this open on a 2-minute timeline, let's do that first. All right, it is going to open well over this Fibonacci level, 117.42. If we want to look at that last week, that is a level that we were staring at for a bit, but it's so gone because everything's been pulling back that it wasn't really an issue. Our spreadsheet said that we needed to day trade long at a pullback of 113.6 or a breach of 115.54. Right? Now the breach of 115.54 was over the top of this, which we immediately did, but when we opened into the next fib level. Those of you who have taken my class know that when we get to the next fib level, there's always some kind of movement that's either a breather or a pause, especially if it's a significant level. Sometimes it blows right through it. Most of the time it takes a hiccup. Here it completely reversed. So what we have to notice is this, two things. We have the break of the first fib, the break of the second fib, and then a pullback. And the moving averages are negative, right? We get the pullback, moving average is negative. This, if you were just looking at it and nothing else in the market, you would automatically go, holy cow, that's short. I mean, it's rejecting the fib level. My moving average is rolling over. I had a huge volume exhaustion candle at the open, and we're just going to pull back. So this is a short, absolutely. All right, guess what? That's exactly what I should have done. Instead, I began, first of all, I get very cautious on gap moves, and this was a big gap move. And so I wanted to see what was going on. I knew it would pull back. I just did not know how much, and I did not know if it would rebound. I had no idea what the market was going to do today. On top of that, the UVOL-DVOL led me astray because it was moving positive all day. Potash normally moves in the same direction as the UVOL-DVOL for the most part. It did not today. It moved with the rest of the market. And this clearly, if we look at this and we say, oh, all right, even if we go, well, let's see what just happens at this 115 level that she gave us. If it fails there, we're definitely going to go short. That's a definite short. So for me, the first thing I didn't do was just look at the chart on its own. And that's what we have to do. We have to look at the chart on its own and say, okay, am I breaking resistance? Am I losing support? That's the first thing that we're going to look at and say. Because although the chart tends to follow the market, it still is its own animal and moves in certain ways that are just set for it, especially if we work from a price levels perspective, which we do. So that's the first thing we do. Step one, what did this gap do to my stock in terms of gapping open above resistance or gapping down below support? Once you figure that out, you're going to look for the very next support/resistance level that is available to that stock. Do not look at the market until you've established in your stock what happened with this gap. Now, once you've assimilated that information, which we can go, well, it shot right up to the next fib, and now it's looking like it's going to do something over here. What is it really going to do? Well, it's chopping around, but I've got inflection on this, and it's rolling over. I also have a very flat volume-weighted MACD, which means there's no momentum sitting right there. Okay, so that automatically will tell us, well, you know what, we're setting up for a short. Simple thing. You don't have to look at anything else going on in the market. Now, here's the second thing that I did wrong. I did not assess that immediately. That was the first thing. The second thing I did wrong was I focused on the market internals more than I focused on the specific stock. And the time you listen to the market internals is when you're actually trading things that move exactly in tandem with it. Things like, well, and it doesn't all the time, Apple doesn't do it all the time, but Apple does a lot, but things like the SPY, the futures, the SSO, the SDS, those sorts of things. Well, the SDS is the inverse, but you know what I'm saying. Things that follow it very routinely. Not that big spikes aren't going to cause big spikes in your stock, but they're just not going to completely change direction and start going crazy just because the market is doing something that is simple and whatever. The only time this changes is if it's news driven, and if something terrible's come out or something really great has come out. It probably will not fade the gap and move in the direction further, but we can always tell that from looking at our moving averages. The third thing I did not do is go to a longer time frame. That's why I say, hey, listen, focus on 2, 3, 4, 5 stocks. Study them, get in there before the market opens, see how they're going to open, see what levels they're breaching, assess what that's going to do to the stock, and whether it presents an extension of a long or a rejection and a short. Whatever it is. You've got to figure that part out before you say, okay, I'm ready to trade this stock. All right,